So it's all a circle. The circle, oh gosh, what was that? It gave me a heart attack.
Hi guys, in this video we're going to talk about when will we start getting our dividends back. So with dividends now starting to resume, it may be some time before yields get back to normal. Hi, I'm Fifi and I'm an engineering consultant living in London, and I make videos about saving money, investing and understanding the economy to make better financial decisions. The drought is ending, people. In the UK, we do love our dividends, and our hearts were broken at the peak of the pandemic with dividends being cut. But now the drought seems to be easing with many resuming payouts. I wanted to have a little chat about this, so grab your cup up. House builders tend to be stapled dividend payers, and this week we saw Bellway, which is a UK house builder, resume dividend payout following pretty strong results. Likewise, British Land, a real estate investment trust, has now also resumed its semi-annual dividend with rent collection back to about 70, and it's not quite back to normal as it did used to pay quarterly, but it's getting there. And there are other areas as well. So one of my favorite stocks during the correction of the pandemic was Diageo. They pretty much kept dividends unchanged, and a popular stock amongst us UK YouTubers is dividend paying BAE Systems, which will now be fully caught up on all dividends, as they will be paying the missed dividends as a special dividend in June. Thank goodness for that. While that does all feel a little bit rosy, let's sprinkle some facts out there, guys. So the absolute figures in terms of cuts still look quite scary and painful. So dividends in the third quarter of this year were down about 50% from the same quarter in 2019. 50%, guys. And that is still a little bit of an improvement from the second quarter, where dividends were down 60% from the same quarter last year. Oh gosh, it is quite scary actually. While the dividends I've mentioned are quite nice, the majority of restorative dividends will not kick in until 2021. Q4 this year will also be in the vicinity of Q2 and Q3 this year. And for that, the best cases are down around 30% in Q4. I had a look at the overall data from The Link, one of the largest shareholder registrars, and they predict 2020 dividends to be 45% lower than 2019, with the hope of some sort of recovery in 2021, but not in total. So let's get in the mood for this, guys. How much recovery should we actually expect in 2021 next year? So Link has forecasted worst case scenarios of 6% gain in 2021 to the best case 15% gain, and that's not great, guys. Let's put it into perspective. That will be around the same levels that companies were paying in 2012. Then you go on to extrapolate a little bit further, and the FTSE dividend futures, which give a gauge of expectation only, show sort of a modest rise again in 2022. But why is that? That's 2 years from now. Surely it would be okay. Well, it's mainly because the pandemic has highlighted another issue. No doubt this year has been pretty challenging, but many market analysts argue that this has just highlighted a problem that was bound to crop up in a crisis. So with our addiction to dividends, and firms are determined to keep shareholders happy, and the dividends become unsustainable. So where companies should retain buffers and also invest, they were focusing on paying their shareholders dividends without having the balance sheet to support it. So it's why investors, when you choose which dividend stocks they're going to pick, need to look carefully at ratios that indicate whether a company is able to support its dividend cover if there were a crisis, and also look at leverage and cash on balance sheets and how it flows through the company. Some other things to consider, which is now just killing the mood, I know, is the macro impacts on some of the largest dividend payers in the UK. So banks, mining, energy. Banks account for about 20% of the dividends in the UK, and with an economic recovery looking slow and painful and our government policy inconsistent, it will pretty much be some time before those dividends will return. That's pretty much the same story for mining and energy, and it's unlikely to recover while commodity prices are so low, which will also mean a stronger global economy. The question is, how can we use this situation to our advantage? Well, it gives us time to build up a dividend paying portfolio, and that is exactly what I'm doing now. We know the best time to dollar cost or pound cost your average is when an asset is depressed, like now for instance. So dollar cost averaging is essentially drip feeding into the market, investing a fixed allocation each month to build a position, and that would be a prudent way to approach dividends for the moment. In fact, I have a few videos videos on this exact topic here if you want to check out my dividend video, which shows you the exact rules I use to find strong dividend stock, and also the ratios, which is super important to look out for. I've also put a video on dollar cost averaging, which just explains exactly what it is and how it works, and the housing market to round off some other things. But there you go. Until next time, let me know your thoughts down there below. What are your best dividend payouts this year, and what's your dividend situation? Cheers, guys.